everybody, welcome to Top Growth Financial. If you're new to this channel, what we like to do is we like to break down stocks, give a full analysis on those stocks, put price targets on different stocks, and just help build up your portfolio over time. So if that sounds interesting to you at all, please push the subscribe button and maybe even hit the like button if you like this video. And so let's get started. So first I wanted to go over what NIO is, and you probably already know, but if not, I just wanted to clarify it for everybody else out there that might not know what it is. So they're a Chinese car manufacturer that specializes in making EVs, or electric vehicles, and they're one of the front runners. Tesla's the main electric vehicle maker right now, and NIO does not supply the US. But there's a lot of reasons to be excited about the EV industry as a whole, just because of where it's going, where countries want it to go. The United States and the Biden administration, they want 50% of all cars to be EVs by 2030, which is a little bit of a hefty number. I don't think that's going to happen, but it just shows where people want things moving. In fact, the European Union wants at least 30 million cars to be electric on the roads by 2030 also. And these goals are backed by China, who is the global leader in EV manufacturing and is actually expected to make 13 million cars by the year 2023. And that's basically triple the US's number. So everything seems to be pointing towards this sector growing rapidly, but just because the sector grows rapidly as a whole does not mean that NIO is going to perform with this sector. They can perform better, they can perform worse. So what I wanted to do now is I want to look deeper into what NIO is doing. I wanted to look into their numbers, and I wanted to put a price target and see what the analysts are looking for in the future with NIO to be a competitor in this future EV industry. First, I just wanted to run over some of their numbers, and their market capitalization is actually $60.2 billion, which is higher than Honda and Ford, which actually kind of does make sense if you look at the way that people look towards innovation in building up that market cap. Honda and Ford, they're more of a traditional automaker, and they make the combustion engines. So this isn't exactly going to correlate when you look at the PE ratio. That's going to be a little bit higher for those high growth companies that are innovating and making something more spectacular for the future. So when we look at Ford, when we look at Honda, they're trying to make that jump. They're trying to make that switch over to the EV sector. And it's going to take some time. But NIO, Tesla, Lucid, they're all getting there already, and they're pushing this industry forward, and they're working towards a bigger goal to push the world forward. So that's something to be very excited about. And that's what I wanted to look at next. I want to look at their valuations compared to their earnings, and also take a look into the future and see what other people think that NIO is going to be at in the future compared to other companies. So companies such as Tesla, NIO, and other innovative companies, they're going to be valued at a way higher PE ratio than traditional companies such as Ford or Honda, because people expect their earnings to be even higher in the future. We're just going to push their PE ratio higher. That's what normally happens with growth companies. So here's a table from FactSet that estimates their annual earnings through 2025, along with their expected PE ratio based on current market caps and the 2025 estimates. And NIO is expected to become profitable in 2023, and going forward, its PE ratio is expected to be lower than Tesla's. And those numbers are supposed to be NIO at 37.7 with a price to earnings estimate, and Tesla at a 50.5. So now I just wanted to go over some analyst opinions with you on NIO stock, and I'm going to do that by taking you through the tip ranks. Let's get started with that. Right now, they're sitting at a 6 smart score, which is just neutral. I mean, the analyst rating is a strong buy, concept is a strong buy with the average price target of $64.50, which is quite higher than it is now. And hedge fund activity has increased, but the sentiment from tip ranks investors is actually very negative, which is a little weird because their earnings just came out and they did better than expected. And I'm going to go over that in a little bit, but that could go along with the new sentiment being bullish and their 12-month change of 238.49%. When you bring up the analyst price target on NIO, you can see that based on the 6 Wall Street analysts offering 12-month price targets for NIO in the last 3 months, the average price target is $64.50, with a high forecast of 70 and a low forecast of 57, which is amazing because the average price target represents a 50.91% change from the last price of $42.74. So according to these analysts, even if it does the worst that it possibly can, only hits $57 in the next 12 months, you're still going to have a very substantial gain off that investment. So they did just come out with their earnings report for Q2, and I think that it should have pushed the price a little bit higher than it did. It actually dipped a little bit after the earnings report came out, but I think this is just because of the regulatory concerns in China and the COVID-19 pandemic that is kind of coming back in waves with the Delta variant. Hopefully that all settles down and straightens itself out shortly. But as of right now, that is pushing the stock price downward. So that is something to keep your eye on. But with those numbers, that actually is very promising for the future. And I would say that it is a buy right now, just because of the price that it's at, where the analysts put their price targets, and that the revenues were higher than expected along with their sales. So they reported quarterly losses of 3 cents per share, which actually beat the analyst estimate of 11 cents per share. Their sales were a little bit better than expected, but not quite what we would like to see. It was $1.31 billion in sales, whereas their projected sales was $1.28 billion in sales. So they just barely beat that number, but they still beat it, which just goes to show you that they're doing well and they're performing well in that sector, even with that chip shortage that kind of cut them off at the end of the quarter. They also issued some third quarter sales guidance in the range of $1.38 and $1.49 billion, and hopefully they can hit those numbers or even beat them, because if they do, they'll push the price even higher. As I said, consistency is key, and they also expected 23 to 25,000 vehicles to be delivered in that time. So right now at $42, I would say that NIO is a buy. I think that the price targets put by TipRanks analysts are actually going to be hit, if not surpassed. So that concludes this video. If you liked it, hit that subscribe button and that like button. It helps with the algorithm, and leave a comment. And for any suggestions in the future, if you want a certain stock broken down, we could do that for you guys. And also follow us on Instagram at Top Growth Financial.